think Arizona. Arizona apparently has held that smart contracts are legally enforceable, so that would be a consideration as well. So yeah, as for C corp and S corps, I would defer to you on the difference in tax policy. I think S corps would flow through taxation,
Sure. So that actually leads to the next question: is like, what are some considerations that people should make when it comes to structuring their companies? Obviously, there's legal size, which Delaware is the most, maybe the most advanced in the field, but also like taxes. Should you incorporate in the United States? Should you incorporate overseas, and so forth? So yeah, sure.
Okay.
So hi, I actually agree with Chase that. Yeah, I agree with Chase that C corp, a corporation, would be ideal for a startup. Just because by using a C corp, you do have the options of issuing for the company issuing multiple classes of shares, preferred stock, common stock, or multiple classes of preferred shares. So you don't have such option when you are a S corp or a LLC. So C corp would be the ideal entity type if it's your intention or if it's your plan in the future to attract out external investors. But one thing I would like to say that, hey, I know that it's a lot of attorneys would advise their clients to go incorporate their company in Delaware. It's just a no-brainer. Hey, I will just do it in Delaware. But as a tax person, I do have a different perspective on that. So for tax purposes, if your company, if your management team is here located in California and you are running your business here out of California, you will be automatically considered a California resident company. And your company will be subject to California tax regardless where the company was incorporated, in Delaware or in California. So if you don't, well, even though like Delaware has a very sophisticated legal environment for corporations, however, once you sell your company there, the company will automatically subject to a lot of maintenance requirements. What I meant by that is that a Delaware incorporated company will be subject to Delaware franchise taxes. You will be required to pay franchise to report to file the franchise tax report and also pay the franchise taxes in Delaware every year, regardless whether your company is actually doing business in Delaware or not. As long as your company is incorporated in Delaware, these things will apply to you. And the second thing is that you have to pay to have a registered agent in Delaware. So what that means is that in case your company gets sued by a third party, so someone in Delaware has to be there to be served for your company. So the maintenance cost is pretty high in Delaware. So I would say that for a first share company, regardless whether you're doing business or not, you still have to pay like $800, $500, $500 I would say for franchise taxes and also the registered agent fees. So I mean, is it really worth it? Maybe yes or maybe no. You make the determination. But probably from the tax perspective, regardless where your company is registered, as long as you're doing business here in California, your management team is located in California, you will be considered a California resident and you will be subject to California corporate income tax regardless.
All right, so yeah, actually we are open to questions like throughout this talk as well. So if any questions come up, please raise your hand. We can stop.
It wasn't really a question. My registered agent in Delaware costs me $50 a year. It's not that crazy.
Oh yeah, sorry. What is the $500? That includes the registered agent's fee. Well, usually it's not going to be that much. You're roughly around $100 plus the Delaware franchise tax. So the Delaware franchise tax is based on your number of shares issued and authorized plus your assets of the preceding year. So it has two components. So roughly, whenever you receive your bill from your registered agent, they will provide you a breakdown of the fee that they're asking you for. Usually a component of that would be your Delaware franchise tax.
So for a company that is thinking about an ICO, there is the whole thing about registering in Europe or in Asia, and can you talk a little bit about that?
So we just kind of went through the exact process that these guys are talking about, and we actually had to go through trying to understand where do we form our company. We looked at tax, obviously, and we looked at the legal implications of what it is to have a TGE, is what we refer to it. It's a token generation event. And so we had to look at what is it going to cost us as a company, what are the long-term legal ramifications of being located in the United States versus being in Singapore, versus being in Switzerland, versus being in Gibraltar, Cayman Islands, I mean, you name it, we ran through every single option. And we consulted many legal advisors, we paid many huge law firms a lot of money to go through this process. It's very painstaking, but in the end we ended up, choosing to be in Switzerland, which is a lot more crypto friendly. There's a lot more resources available, and they have a streamlined process that's more in legal wise, very easily understandable and drawn out for us. So that's why we ended up choosing going to Switzerland. But like I said, we went through every single possible scenario for ourselves, so it's kind of interesting to kind of hear everything from these guys' perspective and knowing that we just went through all of that ourselves.
What if you already have like a C corp already established, maybe about doing an ICO?
So I mean, I'm not gonna give you any legal advice, but I can tell you in terms of my own personal opinion. The legal advice that we did get was they wanted us to create like a parent company, and then wanted us to have these subsidiaries in different places so we can operate it in that terms, where the revenue comes from the parent company and then somehow the other entities are involved. But that was a little just too complicated and very unnecessary for us. But there are ways to do it, as you've stated, but like I said, I don't want to give you like legal advice when I'm not a legal expert. I'm only speaking from my own perspective as a company when we went through the same situation.
I mean, this just illustrates the complexity of going through an ICO. And I understand that it's the hot new thing right now, and a white paper will get you $30 million or whatever. But you're dealing with a cross section of a multitude of commodities laws and securities laws, and you run the risk of and international laws too. So I mean, start with the fundamentals as if you were a San Francisco-based startup company, rather than setting out to raise money through an ICO. You're going to go through the traditional routes. I know that it's not hot and sexy right now, but it's established, and you can avoid intricate legal structures like what you're describing. And we can get into the machinations of ICOs and how to avoid securities regulation. But ultimately, my response is just try to go through the traditional routes. I know it's sexy, but
Going through the ICO, I would agree with Chase on that. It is not an easy process. I know people think, okay, I'm just going to go ahead and put a nice little website together and start pitching my ideas and go, but really it's so difficult to raise money doing a token generation event. I feel like it's so much easier to just go to VCs, go through the traditional routes that are existing and find ways to find funding.
Yeah, from the tax perspective, finding the country where you want to incorporate your company and where you want to launch your ICO is actually the key. I think it's very important as one of the first steps that you need to consider. The reason for that is because U.S. has very harsh taxation system. So if you, regardless whether the money you raise will be treated as security tokens versus utility tokens, there could be tax implications to the company. And especially if you're using a C Corp to run your ICO, a C Corp, it has double taxation. So meaning that every $100 it earns, will be first taxed at the corporate level, at the corporate income tax rate. So when the money is later distributed to the shareholders, the same money will be taxed to the shareholders again at the shareholders' personal level. So there will be two layers of taxation for going through the ICO process in the US. So which might not be very tax advantageous. So first is like incorporating your company in Cayman Island where there's zero income tax rate, okay? Or in Bermuda or British Virgin Islands, one of these tax havens where the income tax rate is really low. So you will be able to, by incorporating in or running your ICO in one of these tax havens, you could potentially avoid at least one layer of taxation, meaning that whatever the money the company earns or taxable from the U.S. perspective will not be taxed in these local jurisdictions. So in the U.S., corporate income tax rate is roughly about 35, can be up to 35% for federal, and for California it's 8.84%. So we're talking about almost like 45% for corporate income tax rate in the U.S., specifically in California. If you incorporate your company in Cayman Islands, so where there's zero income tax rate, so you could eliminate or avoid that 45% income tax. So it's very important for you to determine where you want to incorporate your company and when you're ICO.
And just think long term.
My other thought about the Swiss nonprofit organization, I know that Ethereum has the Ethereum Foundation is a Swiss nonprofit. Tezos also had a Swiss-based nonprofit as well, and if you look at the complaint by the SEC, at the end of the complaint, they hold all of the agents of various parties as acting as one and in concert, regardless of where it was formed. It was one corpus acting together. So if your ICO ends up that you are distributing what is regarded as a U.S. security and you're selling it to U.S. citizens, the location isn't going to matter.
So actually, I was going to say that also recently in the news, I don't know if any of you guys have heard the whole Plex coin debacle. There's a company that started out in Canada. The guy was under certain types of regulations. He had committed wrongdoings in Canada. Couldn't practice. He couldn't be in the securities industry anymore. He decided to run an ICO anyways. And he, even though the Canadian former the SEC said no, he decided to go with it. And after that, he got into trouble not only with Canada, obviously, but also the SEC cracked down on it as well. I know earlier today, I believe he just received like a sentence for jail time. So just a heads up, it is a pretty big deal. So you want to make sure you do your due diligence.
And talking about Swiss Foundation, be aware that the IRS or the U.S. government might not respect the local treatment and how the local country views that legal entity. So even though that the entity itself is a Swiss foundation for local purposes, it may not be the case from the U.S. perspective, tax or legal. So we need to be aware of that. So even if the U.S. government respects that Swiss foundation is a non-profit entity, so by investing or by putting money into that entity, what does that mean? Okay, if you think about it, so many of you have probably, I'm sure many of you have made charitable donations, right? And those donations are usually tax deductible on your personal returns. So if you think about it, Swiss donation to a non-profit entity usually is tax deductible, except for that if that entity, that charity is a foreign entity, then whatever the donations you make to it is not tax deductible. Donations are only deductible if they are made to a U.S. charity, not to a foreign entity. So if the U.S. government sees that Swiss foundation, non-profit foundation, is really a non-profit charity or non-profit entity, then whatever the money you put into it, whatever the money you donate to it, might not be tax deductible. And at the same time, the U.S. might not respect that you are actually investing in a company.
I think Ethereum is a non-profit foundation that's based in Switzerland, so that's why we brought that up. Okay, so Sarah, I actually have a question for you. Since some questions were brought up about ICOs. For those interested in building a company or raising money via the ICO route, would you recommend it? And if so, can you provide like a few pointers for those who are interested in what they should do about?
So first, I do not recommend it. Second, we refer to it as token generation event. So that is the legal term we have to use. And I think it's a very painstaking process as I'm going through it. It's not a quick way to raise a ton of funds. You need a lot of money to be able to market your product, to develop what you're doing. So maybe like about 3 to 5%, I feel like is the current rate. So if you're looking to raise 10 million, you need about 3 to 5% of that money to actually go and market and develop a marketing strategy, pay for legal formation, pay lawyers and attorneys for all their fees. So it is really a difficult process, and like I said, unless you're prepared to go through it and unless you're willing to take all the legal risks that are involved, it is very difficult. So really think about it.
And how long does it take you?
So we've been going through this for over a year now, and we're just kind of picking up into our TGE event now. So we went back and forth with our attorneys many times, reassessing how things look for us, reassessing the process in which we're supposed to go through it. So it takes a lot of effort, a lot of time. And like I said, we're based in Switzerland, so we have to abide by not only Swiss rules and regulations, but also the regulations of the United States and various other countries and the people that are contributing to our project.
Question. So Sarah, how many law firms did you interview? And what are the key top 3 criteria that you have?
So for the U.S., we met with a lot of legal professionals and talked to a lot of different legal entities to figure out what is the best way. And in the end, we decided that it was just too difficult with regulations not being in our favor and not forward-thinking enough. So I think for innovation to really continue and flourish, we wanted to be where we saw a long-term situation where we could really benefit from being in Switzerland.
Okay.
Yep.
I have sort of a tax question, I guess. I want to know where there are U.S. territorial taxes. So I thought we could make income in Switzerland and use it in the States.
So I know you could probably answer the tax question a little bit better, but I know for Swiss, definitely for the TGE event, there's a huge taxation that we would have to pay them anyway.
So it somehow depends on whether your company or your entity is a Swiss foundation or a Swiss business entity. So I would assume that if you were a Swiss entity or foundation, you don't have to pay any taxes there, right? Maybe you
For
could.
TGE, yeah, we have to take a large chunk of whatever we generate because they see it as like
Yeah. Okay. So you still have to, if you were a business entity in Switzerland, so based on, as far as my understanding, the taxes are pretty high. So if you are going to form your company in the crypto valley, let's say, as far as I understand, it could be up to like 30 or 40%, even higher than the US. So be aware of that. So if you pay taxes in Switzerland, so does that mean that you don't have to pay taxes again in the U.S. when the company makes distributions, dividend distributions to the shareholders? No. So on the same income, but however, so whatever taxes you pay in Switzerland can be claimed as foreign tax credit in the U.S. to offset your U.S. tax liability. So U.S. taxes on a worldwide basis. So if the Swiss entity is held by a U.S. parent, so whatever or by the taxes you pay in Switzerland can be claimed by the U.S. parent to offset the U.S. parent's worldwide tax liability.
Question, Sarah. Did you end up going to a Switzerland law firm?
Yes.
Instead, I'm sure the ones in the U.S. are quite much higher fee, right?
It's not the fees that we were really concerned about. It was more or less the legal framework to begin with. Over there's an existing process. There's clear cut out rules and regulations on how these things are viewed. And like I said, long term, we feel like that's more sustainable environment than in the U.S. And also there's an existing ecosystem there where there's a whole crypto valley, which is kind of like Silicon Valley, right? All the resources are there, all the necessary people are there, the money capital of the world is there. So it just made more sense to go where things would be a lot more easier for us than to try to see how things in terms of the regulatory environment in the U.S. turn out to be.
Well, so I'm sure you ended up flying over.
Yeah, of course. We had to go meet with the lawyers, and we have one of the best attorneys in the world. NME Law Group, they're one of the biggest. They are one of the best, and they have about a year-long waiting list. So if you're trying to get to them, like plan a 2-year out event to go. But yeah.
All right, so first off, does anybody have any more questions in regards to like ICO or entity formation?
I just want to clarify.
Sure.
Did you guys say that the 30% from Switzerland, it's on dividends, or is it actually on the total funds raised?
I know that there's the taxes on whatever funds we end up raising. So
Just to treat it as something, so treat it as revenue.
they're treating it as income, like a revenue. So
Wow.
it's huge.
Yeah,
But I
it
think
is.
it's around 30% from what I've known.
Very cool. So, just curious, any more questions in regards to ICOs or entity formation? If not,
So you mentioned that there were some other challenges in the process. Could you kind of provide a few examples of your pre-ICO, the stage and the ICO stage as well?
Sure. I think the biggest is being able to get proper advice and proper guidance from people, having proper advisors in terms of how to set up the environment, where to set it up, what kind of legal issues to avoid in the beginning, just proper naming and calling things the way that they are. So I refer, like I said again, to our event as a token generation event initially, because that's what we're doing. Our tokens represent part of an ecosystem that you're kind of contributing to. So it is not seen as an investment. It is not an investment in terms of the legal structure for us. So I think that's basically the biggest hurdles, is looking at the legal implications and following the law and comply with it as best as we can.
That's a quick question. With some of these token fundraising events, I've seen where there's like a lawsuit, I think, against like Tezos, where one of the ideas is that they might have to refund the people who invested in the coin. In the case that like it goes south or the SEC rules against you, what would one of those potential unwinding events even look like? Would it follow like something traditional, like what we've seen in other asset markets, security markets?
Well, there was actually just an opinion today. There was a San Francisco-based company that began its ICO, and mid-ICO, even before they distributed any tokens, the SEC came knocking on their door. The ICO was halted immediately, and all the money that had been raised through the ICO was immediately returned to the investors. I think that's very dispositive and probably how things would go. In that case, there was no finding of or allegation of fraud as there had been in the Tezos case and the Recoin case, the real estate ICO